Did you know that the CRA can legally take the proceeds from the sale of your home before your mortgage lender gets paid, even if your mortgage was in perfect standing? I'm not kidding. I'm not exaggerating. It's not a theory, and it's not a rumor. It's actually Canadian case law. And like I said, I like to follow policy, I like to follow the law, and tell you how it impacts you. So if you're self-employed, if you run a small business, or if you've ever collected HST, then you definitely want to hear this. So back in 2020, the Federal Court of Appeal ruled in a case called Toronto Dominion Bank versus Canada. So apparently there's a man who was running a small landscaping business. He was collecting GST and HST from his clients, but apparently didn't remit it. So years later, he sold his house, and the proceeds from the sale went to pay his TD mortgage. And everything was fine until CRA showed up and said, yeah, actually, some of that money belongs to us. Thank you very much. And so, a little background on the case. Here's what happened. So there's this section of the act that says that any GST or HST that's collected and not remitted is automatically considered a quote unquote deemed trust for the government. So that trust attaches to everything that the person owns, including their home, the net proceeds, sale proceeds, and even money that they use to pay off other debt. So what happened was CRA sued TD Bank, demanding a repayment of just shy of $68,000 plus interest. And believe it or not, the courts sided with the CRA. So this quote unquote deemed trust, it actually outranks the bank's secured mortgage. So the meaning of that is that CRA had super priority to claim to the proceeds above and beyond the lender, the homeowner, and anyone else who may have had a registered lien. So I don't know, what's the implication of that? Let me tell you. That ruling changes how financing and property law now works in Canada. So if you're self-employed, or if you've ever registered for an HST number, your home equity can actually be exposed even years later, and even if you didn't remit anything. So for lenders, this means a new kind of risk. Banks and definitely private lenders can actually lose repayment funds if a borrower had an old unremitted HST. So today, you're going to start seeing tighter underwriting, more questions about business activity, and definitely new compliance checklists coming out for sure. So buyers and lawyers, they're definitely going to have extra caution, extra work to do. They're going to start asking for tax compliance declarations or CRA clearance certificates before closing, especially if the seller is self-employed. So, little bit of a reality check, right? We're going to start seeing that people who are refinancing or paying debts and using their home equity for their business, they're going to have to be careful. Because even if the mortgage funds have been already advanced and gone, the CRA's quote unquote deemed trust that I spoke about, they can come back anytime and claim a piece of it. So, this is a quiet form of super priority, and it means that Canadians and honestly a lot of professionals, they still don't know about it because it's just something new that's come out, but I like to stay on top of this sort of stuff. So what's the lesson? Today's lesson, if you're self-employed, stay current with your GST and HST. Don't assume that once your house sells or that the loan is paid, that chapter of your, of your business is closed. CRA can definitely extend further than you think. And yeah, so let's be careful. So anyways, this case, TD versus Canada, it is definitely a wake-up call, ladies and gentlemen, about how tax law and property law intersect in ways that directly affect your mortgage, your home equity, and your financial security overall. So if you got this far, thank you so much. If this video helped you understand how policy and case law impact mortgages in the real world, please hit like and subscribe. Share it with somebody who might, need some good advice, solid advice. I like to share weekly updates on how politics shapes policy and how policy pretty much impacts your rates and your property, and most of all, your peace of mind. So thank you very much for watching. I really appreciate it. And until next week, be well.